Here are 5 trading tips to help minimize your trading costs. Number 1, liquidity dynamics. Well, the first point is liquidity dynamics, and then we need to think about the type of trader as well. If you're an ultra short-term trader like a scalper, for example, you're really going to be sticking to the Aussie dollars of this world and the majors where the spreads are much tighter because liquidity is much more abundant. If you're a longer-term trader, understand that the exotics may have a wider spread because liquidity is less prevalent, but the percentage moves can be much greater as well. So liquidity really determines the spread, and that can have a big impact on the cost. Number 2, time of day. Do consider the time of day and whether there's news coming up as well, because that can have big implications on liquidity dynamics in markets. Participants can move around their orders, and that can widen bid-offer spreads in the market as well. So if you're a high-frequency trader, for example, a high-activity trader, high-volume trader, you can see those spreads widen, which can be a real big consideration for you. So that time of day, and also whether you've got a key announcement like an FOMC meeting or a non-farm payrolls number, can really impact the cost for trading on an intraday basis. Number 3, fast-moving markets. Again, this comes down to strategy and your time in the markets. But generally, it's worth understanding that when news breaks that they weren't expecting and you get those explosive moves in price and range expansion, liquidity dynamics change and you can see bid-offer spreads widening. And again, that can be an increased cost to trading. So understand the fast-moving markets can impact trading costs as well. Number 4, swaps. Swaps are an essential part of the trading cost structure. You need to consider whether you're paying swaps or you're receiving swaps. They're based on relative interest rate differentials, and some people actually base their whole strategy on picking up the income from those swap differentials. So that is something that people do need to consider as part of the cost structure. Are you paying swaps? Are you receiving swaps? And how does it impact your account? Number 5, hedging considerations. Don't hedge a position. You shouldn't be in that position in the first place. Take a loss early. Well, I've seen it over the years, traders taking a position in the DAX or the Aussie dollar or whatever that market is, and as that market goes into drawdown, they then decide rather than take the loss is hedge the position by taking an opposing position. And in that situation, they're just giving the broker funding and they refuse to lift the leg. They don't know what to do. So rather than actually get into that position in the first place, take the loss early. For more information about the costs associated with trading, go to the Compare Forex Brokers website and go to the Broker Review tab.